that being said, thank everybody. I want to welcome all of you guys to the National Self-Storage Investment Club. I'm Brandon Robinson, president of the club, and guys, we're one of the fastest growing clubs in the nation. We just kicked this club off in February, and we're already at 81 members. We've had some great speakers come in. We've had Brett Henry speaking. We've had John Brunig from Store Track. We've had Quick Store. We've had Bank 59. So it's a great group to be a part of. And just to give you guys a little bit of history about the group, this is something that we started we started working on it last year because we wanted to create a platform where a lot of first time and new investors could have a place where we could connect, we could work on deals, sometimes even raise capital within the group, and most importantly, just learn best practices. So we'll bring in guest speakers such as the Brett Henrys or the John Brunigs and various others, just to give us some education on what we can do to find good deals to buy, and also how we can better manage our deals and optimize the properties that we currently own. And one thing that I'm going to show you guys this real quick, and I'm not going to spend too much time on it because we want to hear from there's someone else here that we want to hear from and not from me. But we just kicked off we just launched our educational portal here on our website, and this is something I'm very proud about. It was years in the making, and it consists of over 100 courses at various different levels, all providing education on different aspects of self-storage. So we have some courses in here on how to finance storage, how to underwrite them, how to how to manage them, how to grow your revenue. We even have one course in here that I just went over with one of our members yesterday, the 90-day takeover plan. So it's a group. It's Jasmine Rudera and Jose Ternicio. They just purchased a storage that we helped them purchase in Montgomery, Alabama. It's their first one. So we went over this module on, okay, what to do when you first buy the facility within the first 90 days. Getting your management software and your systems all converted over to you, getting staffing, introduction to the tenant. So this is this is something I'm very proud about. And if I never do anything else in storage, if I never sell another deal to the Brett Henry or Liz, I'm very proud that we've created this course. There's also courses in here, guys, about raising capital and putting together syndications. This is some very high level stuff. This is not just something that we went on, YouTube and searched and put together. No, this is very high level stuff, something I'm very proud about. And after we have our meeting today, if you guys want to stay on, I will be doing a tutorial and just giving a brief overview about about the training system. So anyway, with that being said, I'm going to kick this over to we have a special guest that's going to be doing the introduction, and I'm going to kick this over to you, Allison. Go ahead, it's on you.
Cool. I'm going to introduce Liz, and she has a really impressive resume. She's one of my favorite people. She's the founder and CEO of Merritt Hill, served on the Merritt Hill Board of Directors since its inception in 2016. She's been investing in the sector exclusively since 2006. She was actually the former head of self-storage investments at WP Carey, where she worked for over 11 years. And with her team, she built, from inception, the 8th largest self-storage operator in the U.S. She co-founded Carey's self-storage investment platform as the firm's first independent investment vertical outside of triple net lease, and she helped to raise the initial capital for the self-storage platform. Over the course of her career, Liz has evaluated over 12.6 thousand self-storage acquisitions consisting of more than 8.4 thousand properties, totaling over $33 billion with a B in asset value. Liz has sourced and executed 385 self-storage investments, acquiring 653 separate self-storage properties, completing 21 full-cycle portfolio and single asset exits of 174 properties, realizing significant returns on the investments she made, and 271 separate financings comprising more than 921 properties. Altogether, totaling more than 10.7 billion in self-storage transaction volume. She also hoped to invest in 25 self-storage facilities and 18 transactions before she was the lead investment person responsible for sourcing, selecting, and determining the appropriate value to pay for each investment. Prior to Carrie, she spent 4 years as an analyst and then an associate in the private equity group at Brown Brothers. She serves on the board of trustees for the Poly Prep Country Day School and the College External Advisory Board at the University of Pennsylvania, and she previously served on the Penn Fund Board. She's also a member of the Academy at the University of Pennsylvania. Liz graduated Phi Beta Kappa and summa cum laude from the University of Pennsylvania, and she got her MBA from Harvard Business School.
Yeah.
I usually try to hide that last part.
It's so impressive.
Man, that's one resume. That's a very extensive resume. So, Liz, before we get started, so hey, everyone, I just want to tell you guys about the structure and how this is going to flow. So it'll be myself, Allison, and Ingla. We'll be asking Liz a series of questions. However, we'd like you guys to be on mute, but we do want you to participate. So if you have any questions for Liz, please put them in the chat. The three of us will be monitoring the chat, and we will, mix those questions in to Liz as well. And I will tell you, we probably will not get to all of our questions, but that's okay, because if we don't get to everything today, Liz is so great and wonderful that she's going to come on here again at some point later this year. Right,
Woman of my word, I haven't said that yet, but if I did say it, I will have to.
Yes. Well, so Liz, but before I get started with the first question, I need to know. What's the significant? Baby got back. What's the? I guess that's your favorite song. Like, what's the significance to that? Is there some type of story behind that we should know about? What's going on with that?
I grew up in the inner city of Baltimore, in sort of a time when that was not celebrated. Let's just put it that way, and it became sort of something that resonated with me as somebody who is not as tall and lean as one would want to be potentially when you were growing up.
Right.
So it became sort of, I'm owning this.
I got you.
As opposed to embarrassed by it.
I got you. Well, you know what? Speaking of that, let's talk about who was Liz as a child. We all know you. Okay, billions of dollars in storage transactions. Great. Doing great things in self-storage, but like, who were you before all of that? Like, where'd you grow up? How was your childhood? How was your household? What sort of things were you into? I mean, it seems like you're into 90s rap, but go ahead. Let's give us some unpack that.
I hope I haven't changed that much from when I was a child, to be honest. I mean, I think I've been pretty consistently, I was the second child, and my brother is and was a genius. And I think a lot of what informed how I thought of myself was just how intelligent he was, and candidly never really saw myself to be smart in light of that. It wasn't anything he or my parents said or did. It was just, he is just an off the charts thinker and intellect. And I think it informed a lot of my childhood. I also had all boy cousins and then a brother. And so I was very much a tomboy. And I was a pastor's child. So a lot of people probably have a sense of what that might be. But I grew up actually in a manse attached to a church. And my brother and I can't believe we've never talked about this.
No. Well, I remember you told me that your dad was a pastor or minister. I didn't know about some of the other stuff.
Yeah. So we grew up next to a church in the inner city of Baltimore, and my dad actually never graduated from high school. My parents are wonderful people, gave us a lot of unconditional love, and also honestly, it was a very unstable home for a lot of reasons. And so uh, it definitely, the combination of all of the love and the instability, I think, created a lot of what I wanted in life. And above all else, candidly, I never wanted to be rich. When you grow up, my dad made 80 bucks a week. So to me, rich was like $100,000 a year. I didn't know like anything about this world growing up. Nor honestly did I ever dream of it. Money has never ever been a goal. What was always driving me, and still to this day drives me, is having stability, both financial and emotionally, for my children. And I think the only thing I ever knew I wanted to be, and still to this day, is actually a mother. And it's the thing I care the most about. And I think that's a little potentially misunderstood when someone ends up being really successful as a woman, that, and I think a lot of women maybe have felt like they have to put on an image that that's not important to them. But that is honestly my first identity, like being a mom and a wife to my husband, who I was fortunate enough to meet in college, who've been together forever. And I would say, in terms of like how I judge myself as a human being, it's really how I am as a boss and a mother and a wife, because those are the people who know you and your truth.
Right.
And that's where I want to make sure I'm showing up my best. Like that's where I want to be sure that I'm putting my energy and effort into.
Gotcha. So when you say, okay, inner city Baltimore, like what are you talking about? Like in the
Like why?
hood, gangs,
Like
like which one?
really, 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 like, yeah. And actually, like I mentioned, we were in a manse connected to a church, and so my parents would bring, like, people would knock on the door needing money, and my parents would just bring, like, have them stay with us. In fact, one of my earliest childhood memories was we had a African American man who was blind living with us. And my parents well, my mom sadly passed away this year. My father's still alive. But like, they're just very giving people. And I honestly think that example was such a great example in life at an early age, that, thinking about other people and caring for other people is really part of the human experience and part of our responsibility as humans. And I think if more people did that on just sort of a day-to-day basis, the world would be in a better place.
Right.
But my parents were, very willing to open up their lives and home to anyone who asked.
I got you. That kind of takes me into the next question. Like, what do you think were some of the experience? I mean, you mentioned, taking in the blind man into your home, but what do you think are some experiences, positive or negative, that you think had the biggest impact on shaping, who you are today, and that drive and ambition that that you develop?
I think similar to a lot of really successful people, and maybe this is too open, but like that feeling of you're not enough, that you can, like a lot of people have, sort of just making sure that I'm doing enough, that I'm pushing forward. And also because my parents were so unstable and poor, I always knew I had to take care of my parents financially. Like they never owned a home until I was able to buy them one. And I've been taking care of them actually way before I started Merritt Hill. But I think the biggest thing was I never thought I was that smart. And to be honest, like math initially didn't come that easy to me. And I tell one of my daughters struggles with math. And I was like, mommy I got like most improved in math in high school. Um, and I'd always tell her that, I think I always had this feeling that I could will my way through life, and that I was going to create something different for my children. You know, we had, I think, you know, one experience as a child that I'll never forget. My mom, I think I've shared this before, but I really think that women undersell themselves as investors, because if you can shop, you can invest. And I really feel like I learned how to invest in part from being so poor. My mom was a stay-at-home mom. She actually also had a daycare at some point, but like she would take me to all the different grocery stores, like 5 different grocery stores with all the circulars to shop, because we had so little money to shop. And she taught me sort of like, this is a deal, this is not a deal, and how to look through sort of like, you know, that looks like a deal, but actually it costs more on a per ounce basis than this, right? And I think, but I remember once we were at a grocery store in the checkout line, and this happened a lot. And I still have like anxiety about credit cards being run because of this, which is ironic. I think when you grow up poor, you never really feel like you're wealthy. Like, you know, like you're gonna get found out, you don't belong here because you didn't grow up in this world.
Right.
But basically, her credit card got declined, and I was asked to put every single grocery in the cart away. And it was a really humiliating experience as like a 5-year-old probably. And I think just that, like what it feels like to listen to your parents argue all the time over money and bouncing checks and stuff, and just like that definitely was a big driver to not have that for myself or my kids. And then the feeling that I wasn't as smart as everybody else, so I was just going to have to work harder than everybody else. And I think to this day, I probably work harder than almost like most people would say, that I work harder probably than most people they know. And I feel like, you know, that's important for people who are running things to not just say to do something, but to live it themselves. So like do as I do, not as I say. And I think part of the reason why we've been so successful was in part because I work my ass off. And you know, like I don't expect of others something I don't expect of myself. I hold myself to a higher standard actually than I hold other people to.
Yeah. No, I appreciate it. No, that's amazing. Because I mean, people they see you and they see the success and they might just automatically assume, oh, she probably came from money or you know, and that's where you got all this knowledge from, but they don't understand that you came from nothing, inner city Baltimore. So inner city Baltimore, you probably, I mean, you had to be like, okay, maybe the one white girl amongst a sea of just black. I mean, is that right? Is that
I mean, honestly, it's kind of a funny thing to think about. I was probably the minority, like
right?
in the circle, like, and actually I chose to raise my children in Brooklyn when I moved to New York because I didn't want our children to, my husband was also in finance, like he's now not working, but I didn't want our children to think that the world was how some of the wealthy areas of New York are, and to not have perspective of like what it is to be human in this world, and to not have like, one of the beautiful things about New York is there is so much diversity. And so I chose to live within that diversity. And we actually, I've lived in Brooklyn since '99, and we live next to the Barclays Center. But when we moved there, I am a real estate girl. The Barclays Center wasn't there. So we got our first apartment. This is probably a New York thing, but we got a 3,300 square foot apartment for less than 500 a foot, which like, you know, I can look to my right and see this massive tower being built that's probably like 1,200, 1,500 a foot in Brooklyn. So it was a good real estate deal. But I've lived here through sort of a lot of the transition and change. And I think it's important to be able to understand like the realities of different people. And honestly, Brandon, also to understand candidly the white point that not every white person has it like easy, you know, like everyone has their own problems. And candidly,
there's no white privilege. So that white privilege is just like a myth, right?
Like, I mean, I think, you know, I think everyone, and men have, you know, like it's gone a little too far to the point where I think we're really putting people in boxes we didn't want to be in ourselves. And I think we all should identify as humans above all else and not just, a woman or white.
Right.
I think that to your point, I did go to really good schools, but I was on financial aid. And that was a time like I feel like I grew up at a time when it wasn't cool to be poor, and now I'm sort of rich at a time when it's not cool to be rich. Like everyone like kind of hates on you. I'm not getting this trade right, but basically, I've most of the money I give away is for financial aid to enable other people to have that. And, I'm fortunate that I was able to go to the schools that I went to and wouldn't have been able to without someone giving that. And I try to pay that forward. But I also think it just is a good reminder that it's really easy to judge people by the cover.
Right.
And it's you don't want to be judged that way as a black man, and I don't want to be judged that way as a white woman.
Yeah. No, that's good. English. So you talked about school English. She has the next question on your.
Yeah, and I love hearing about your humble beginnings. I grew up as a PK myself, so
Nice.
I can relate to you on that. But yeah, I wanted to talk a little bit about your college years as a young woman coming up through the University of Pennsylvania and then Harvard Business School. Were there moments where you felt you had to prove yourself more? And if so, how did that shape how you operate today?
I think every day. I mean, I think I'm finally settling into myself as I've gotten older, which is really a nice thing about getting older. But I think that for me, the moments of trying to prove myself really always came from me. And, I didn't set out in storage or in life ever competing with other people. Like, I think part of the reason why we've been so good at what we do is I'm always pushing forward and trying to iterate and get better. And like in my own life, like I call it like same store. Like, like for instance, if I have a conversation with someone and I feel like I wasn't listening very well, or I could have said something more politely, I'll like sort of sit on that and try to do better the next time. And I think one thing that's missing in a lot of leaders, and I think is really important, is humility. And I think, doubting yourself can be seen as a negative. It also can be a really important part of investing in particular. Like I spend more time on the deals I messed up than on the successes. And the reason I do that is that if you don't, I mean, people say making a mistake is a good thing. And that's just like not true. You got to like finish the line, right? It's making the mistake, acknowledging the mistake, right? Because a lot of people really have trouble owning their mistakes and themselves, right? And so I really genuinely try to call myself out. And I think that becomes more and more important the wealthier and more successful you get, because you have more and more people around you not like wanting to do that or afraid to do that. And I think a lot of successful people want to surround themselves with people who are just sort of an echo chamber of their greatness, right? Like someone actually told me that it's often not the person who changes with success, it's the people around them that can change. And so I think, basically almost every day in college, I would probably say I would not necessarily doubt myself, but make sure I had studied more than enough, and like I never sort of wing it. To this day, I don't wing it. Like investors have asked me, like, oh, you probably know his storage deal from a mile away. And to this day, and my team can tell you this, I dig in hard on every deal. And part of the reason why we are considered one of the best buyers out there is I've never retraded a deal. And the reason that is because I look at every detail and really dig in way before we put an LOI in. And so, and that's a little bit about I guess you could call it doubt, but it's about like thinking again. There's one of my favorite authors, Adam Grant, wrote a book called Thinking Again. And part of what he is saying is the imposter syndrome is actually not necessarily a bad thing relative to success, because it actually creates a lot of your success when you're not so like sure of yourself, right? Like, and so I think, I got one B plus in my entire life, I think, in intros to psychology, actually. And like, that was a sting for me, as you can tell, but I was always so driven to be sure I was getting an A, and I think just would study. I would actually study while walking around. Like I have ADHD, which at the time when we were growing up, there wasn't all this medicine and everything wasn't solved for, which I think in a lot of ways is like my secret power because I was able to like I worked around it and I would memorize things like walking. Like I was in incredible shape in college. I used to run 7 miles a day and I would walk everywhere while memorizing like things that I needed to memorize. And that's how I started sort of got around a lot of the things that could have set me back. And I think that's just an important message to a lot of people today. I feel like we're sort of in a victim kind of culture instead of an owning culture. And unfortunately, no one's going to save you. You have to do it for yourself, right? And it's not a game worth playing where you're trying to say like, I have it worse than you. Like, it's just like focus on you and how you can influence your outcome and feeling that agency is so important, I think. Like I want my children to feel that, the agency of like their actions have impact and they can control them. That was like a little
Yeah.
I would say that the one defining moment in my life, like where I really felt like a total failure. Like I mentioned, my dad didn't go to college. My brother actually, like I said, was a genius. He got into Yale. He went to Yale. And that was the only college I'd ever been to. And as I mentioned, I had straight A's and I was like a super like student. I was at a parochial school on financial aid, or I went to Baltimore Friends only because he got in and I got to follow him really. And I was so far behind when I got there. I also felt like I needed to work my tail off to stay getting my A's. But Yale had been the only university I ever went to, so that was the only thing I could ever imagine going to. And I got not and the head of college like counseling or whatever at Friends was like, "Oh, you're a shoo-in," and basically I didn't just get like waitlisted or whatever. I just got flat out rejected. And it was one of those moments. I know it sounds silly, but where I felt like, like we all have those moments where I think you just feel like you can't fail any more than that, or like you're a total kind of mess, like F up. It's funny because it's the thing that led me to my husband. My husband ironically got into Yale, went there on an admit weekend, and he thought they were so boring that they didn't take him out. And then he went to Penn, he went to Wharton, and like it was like finals week and they still took him out. And so he decided to go to Wharton instead of Yale. And that's how we met. Otherwise, like, I didn't get in and he did and didn't go. Our oldest daughter really cares about where she goes to college. And I really try to remind her like that, things work out in the end and they don't always work out the way you think they were meant to. But they do. And I think to the doubt point, I think the older I've gotten, the more I understand that and I can lean into that. So I'm not paralyzed by doubt. And I think doubt can be healthy and unhealthy. And I would say I'm not a very anxious person. I'm just somebody who's reflective and like trying to push forward. So the doubt, I think if it goes into sort of a spiral and spinning is very different.
Yeah, that's good. I was gonna open it up, guys. We're gonna pause and open up. Anyone anyone got any questions before we move on to the next set of questions? Any no? All right, they're listening and taking it all in. They love you, Liz. I'm getting text messages from folks like, "Oh man, she's great. She's she's awesome. She's amazing." So
Thank you.
yeah. So there's
My mom in heaven would be proud. I'm having a rough year. My mom passed away in February, and I had a very good friend also. It's just been a rough year, so that makes me happy.
yeah. No, we appreciate it. And you said something. So before we move on to the next question, you said something that I could definitely reiterate in terms of before you submit an LOI, like you look at you look at everything. You do a lot of due diligence. Sometimes, like as a broker, it could be we get a little bit annoyed. We're like, dang, Liz, can't you just give me an offer? All right, I sent you this deal 2 weeks ago. Like, what are you still, But I think that's the reason also why, like you said, you've never retraded on the deal. Every time you've gotten to escrow, at least on deals that we've done and with other folks I know you've dealt with, you've always closed at the asking price.
Yep. Or at the price we agreed on.
Yeah. So CMB, we got actually a question from CMB and Prentice. So CMB is asking, how do you approach underwriting assets? Like, can you walk us through your process of how you underwrite assets?
That's a big question.
Isn't it?
Well, one, I think we're informed by the assets we own, right? And so we do a lot of work on the rents in the market. I mean, I think, like, to answer it relatively simply, it would probably be that we're looking at sort of the in-place cash flow or cap rate, and then what we think the stabilized cap rate can be. And it's really a trade-off between the risk and return of that, like, equation. So in a perfect world, you're getting a lot of in-place cash flow and it still has upside. Those deals don't really exist as much in storage as they used to. But like, you really want to we're trying to make sure that those rents are actually accurate, and the actual achieved rents, not the market rents, right? Like, in the market, that we have a really strong understanding of that. And we are I saw someone said, are we solving for IRR? We're trying to achieve unlevered returns of about 10%. And then obviously we lever that. But yeah, we are return focused because our investors are mostly endowments, and that's what they are focused on. Candidly, when I left Carey, the portfolio that I had built there with our team was crazy, 19% cash on cash.
Wow.
And so honestly, that's what I would like to underwrite to, and that's how I would do it. If we had no investors, I would probably do a lot of what a lot of you guys do, which is own one or two storage assets, and just continue to grow the cash flow. And so that's like, I think what's so incredible about storage, right, is that it has durable cash flow that can also grow. That's very unique. Like, like to have both of those things. But we're looking at the growth potential and that trade-off between what the current interest rate is and, like, how long we think it's going to take to get there and what the risks are getting there. And so the obvious thing that we're always doing is a very thorough development search, because
Right.
above all else, development has really hurt our industry. And when you look at our portfolio, that definitely is probably the biggest impact on when we don't achieve our projections, when something gets built, like, on top of us or near us, and we're competing against that.
I got you. Okay. Well, Allison has the next set of questions, but actually this is a good question from Nick that I want to ask, because I know you guys don't do any management in-house, and he was asking, would Merit ever look at managing sites in-house?
Yeah, we've thought about that. I have thought about it. I think that you really are only exceptional things you love. And I'm a deal girl and I
Right.
love deals. And I think most people who do management or add-on management, it's really about, like, the additional management fee income and TI income. And I really think you have to focus on what your investors want and, like, focus on the returns and what you promised them, not like your own P&L. And it is really hard to manage better than Extra Space and CubeSmart. And I've been saying that for now 20 years. I think I was one of their first customers and definitely their biggest customer. Both of them. I was definitely one of Cube's biggest and first customers, because they bought Carol Shipley's business that we were using at Carey. And that's how they got into the third-party management business. And then I sort of grew up in this industry actually alongside Noah Springer at Extra Space. And actually,
Okay.
back in the day, one time he said, I think you have more faith in us than we have in ourselves. Like, but I mean, they're just, I mean, both of those companies just exceptionally well run, and they've been at it for so long. It's really hard to build something like that would effectively compete with that. Having said that, I will say a lot of people make the mistake when they're buying in this industry that mom and pops can't manage as well, if not better. And I have seen properties that are managed, I hate that term mom and pop, but are managed by smaller owners who just like literally are all over it. And it's one asset. And I do think that the bigger and bigger extra and cube have gotten, some of the details, you know, aren't, I feel bad saying this, but like it's hard to be as in touch with every, like the pulse of every property when you have thousands of properties, right? And so, and that's why we have a very active asset management team that's like amazing, led by Stephen Teixeira. And that has become more and more active because they've become bigger and bigger. And, you know, just like anyone, you can miss things. So I've thought about it, but I have so much data now showing just how well they've done. And I think it's a really hard business. It's the people business. And I think kind of focusing in on what you do best and love is probably a easier, like sort of a more successful formula, probably.
Gotcha. All right, go ahead, Allison.
Yeah, well, actually kind of just like piggybacking off of what you were just talking about, but what really that kind of drew you initially to self-storage? What was like the appeal at first blush?
I think that durable cash flow. I think the granularity, like I'm a worker innately, and I love deals. So like the fact that there really isn't any free lunch, I think a lot of people want to get into storage and buy a big portfolio and get the same returns that you would get buying one off, and it just doesn't work like that. And so the fact that there is like, it's actually like very simple and also complex business, right? Like on the one hand, it's relatively simple. On the other, the more and more I've gotten into it, we have so much data, and I love looking at all these different things. And I said to someone on my team the other day, I was like, once I actually finally figure out all of this, I think I'll be done working. Because like you can always learn something new, and you can always look at something a different way, because there are so many operating levers, and there's so many customers. And so I think really it boils down to the fact that it is such, the durability is because there's so many customers, right? It's not an office building with one or two leases, and the actual payments are relatively small. And so you don't have this problem where you lose one customer and you can't make your debt service, right? And that also means that there's just so many more levers to pull and things to think about doing than there are in a lot of other asset classes. And I love that operational impact. I think everyone likes to roll up their sleeves in their job and know that they're making an impact. And like, you can really see that in storage. Like if you focus in on, certain aspects of a store that aren't doing well, and you can actually turn it around. But I think kind of, as I mentioned before, I think it's the fact that the durability of the cash flow combined with the ability to grow it is really unique. And I think particularly in this market with how high interest rates are, there's no way we could buy storage if there wasn't a way to grow it. And I think that goes to like one thing, Brandon and I have this conversation about the push-pull kind of about the underwriting in like how we're paying for things. Like a lot of times we're paying on our numbers like a 3 cap. And sellers will grow their revenue and say, wait, can I get more? And it's like, we were definitely already giving you credit for that, right? Like, because we've modeled out what the stabilized yield would be. And if we're paying that low in a market that has like, 6.5% interest rate, like obviously that stabilized yield has to be well in excess of 3 and also in excess of 6.5. So, that's the balance, I guess, between the risk and return, what we're doing. And I look at it sort of like in a lot of our investors ask, like, why are these sellers not using, why aren't they using third-party management company? And a lot of the times I think it's because they know they're going to get paid for that without having to take the risk of it anyway. Like if you could sell your store for 3 cap, like, I mean, like, you know, in place, like on our expenses, because the other thing is, yes, typically there's rent room, but to get there, you got to spend money. And our expense structure is almost always materially higher than the in-place expense structure of most sellers, like, you know, if they're sort of a one-off seller. And like, I think you could make the point that they're losing a lot of money if they weren't able to get paid for that at the end, for sure. But they're kind of using it as their business. They have tax deductions. They like aren't paying as much an expense or management fee. They're keeping the TI, right? And so like it actually works out to be a really great trade for most people because they get that higher cash flow until they sell it. And if they were had to discount that, then it would be probably not the smartest move. But it's now being paid for by people like me and others.
Great, thank you. Yeah. So I love this question. What made you take the leap to build Merit Hill after leaving Carrie?
It's a big question.
Right?
I'll answer it the way I'm allowed to. WB Carey was probably one of like the most amazing companies I've ever met or worked at. Bill Carey, the founder, was I just a unique human being on every level. And he ran WB Carey like his family. And I learned so much from him and have really used a lot of what I learned from him and the partners I worked at, Brown Brothers Harriman, in terms of how I wanted to lead and build Merit Hill, because I've built it very much like a family. And when he passed away, the culture of the company was just changing so much that it just didn't feel like the right place. And then the company was getting a lot of pressure with the conflict because we were investing out of their non-traded REITs and they were a triple net lease REIT. And those non-traded REITs invested in triple net leases as well. And their investors were really pushing them hard on why are they buying things in these funds instead of into the REIT. And so the capital source we were using to invest in storage was at risk as well. And so honestly, I mean, it's crazy. I never set out to be a big storage company, like, you know, or like build a huge portfolio there or here. I really never set out to start a company. I'm actually relatively risk averse. So unless I felt like I was kind of forced to do it, I wouldn't have done it. And I could have just left and gotten a job, but I had a 5-person team that I didn't want to leave. And I didn't feel like it was the best place to work anymore. So I decided to start Merit Hill as a result of that. And I had a 6-year-old, a 4-year-old, and a 2-year-old at the time. Ooh. And then at the end of that year, we had a fire in our apartment while we were in Canada on New Year's Eve. One of my best friends who was renting the apartment that we bought next door called and said our house was on, and we lost everything. So I sort of had to build Merit Hill and rebuild our apartment at the same time over like the course of a 2-year period before we got back to our home.
I just want to add something too, because every single person that was on your team at WP Carey followed you to Merit Hill. I feel like that speaks a lot to just, I've got goosebumps, you know, what your team says about you.
That's the thing I'm the most proud of, like of all the things like that. And that my kids still want to hang out with me. And then I'm still happily married. I mean, marriage takes work, right? Yeah. Yeah, and actually all of them are still here with the exception of one who is, I think, living his best life in Paris right now. We were pretty successful, so he hasn't been working since he left. One of my best friends, he's like my heart. He came to my mom's funeral. Like, anyway, like we're all still great friends, and they truly are some of my favorite people in the world and truly family. And I just feel so fortunate to have had them. Like, you know, I started and then they all quit, I guess 4 or 5 months later and like have had them really give me useful time. It's really
Oh,
cool.
wow. Very cool. Kind of switching a little bit. We've kind of touched on this before, but how do you feel like you've ever been underestimated, overlooked, and how did that kind of shape how you show up?
I love to be underestimated. In fact, it was much easier when no one knew who I was. And I'd much rather be considered a dumb blonde than people know where I went to college. Because I think, like, I love a pool shark. I wish I could play pool better. I really would love to be one. But I mean, I think it's harder to hide once you've had success, right? I think that we're all underestimated because I think we underestimate ourselves. Like, there's a great quote. I don't know exactly who said it, but it's something about like, your greatest fear is not that you're not like, so strong, but actually that you're stronger and wiser than you ever realized, right? Like, I think we all hold ourselves into a smaller place than we need to occupy in the world. And I think we're all capable of things that we don't even realize we're capable of. And I think the best example of that is sometimes when life really kicks you in the butt, like, you get through it and you never, I mean, our first child almost died at birth and she has a rare genetic syndrome and have heart temperature, but we were told she was going to die by her first birthday. And we got through that. And that's not something that you ever think you would be able to deal with until you have to, right? And she's doing awesome today. They misdiagnosed her. They thought she had something called Pompei's disease. Children's Hospital of Philadelphia has one of the biggest parts of my heart, and actually is an investor of ours now, which is a really full circle moment. But I think, when you are dealt some really tough stuff in life, I think the fact that you deal with it should give you the strength to realize that you can deal with anything. And that at that time period definitely was. I think you had the question of like pressure between being a mom and like work. I feel that pressure every day because I'm a pleaser and I'm really only happy when everyone else around me is happy, which I should have thought about having 3 kids. I know you guys have 4. I don't know how you're doing it. Because like that whole you're only as happy as your least happy kid is totally true. And the more kids you have, the more likely you're not to be happy. Like because it's like that magical point where they're all happy and everything's smooth sailing. That I really feel and identify with that. But also my team, like I hate letting anyone down. And like if I have to run out of here, like I had a board call last night, and I had given a bunch of we have our annual meeting next week, and I'd given a bunch of edits to my team, and I was like, oh, I don't have time to go over this, but please don't stay all night. Like we'll deal with it. Like I'm always like trying to handle like needing to be in multiple places at once. And I think that's probably my most frustrating thing is that you really can't be everywhere you want and need to be. And so that forces you to prioritize. And one thing that I prioritized is I don't do any social media. I'm on LinkedIn, but if you reach out to me, I probably will never accept you.
Yeah, hey, Liz, I sent you a request last year. You still haven't accepted my.
I haven't been on it since. Maybe just to look someone up. I don't watch much TV, and a lot of people think they don't have as much time as they really do. You waste a lot of time. In fact, I have this amazing coach who's changed my life. You can go to his thing called Game Changer, Devin Vandenson. He really has changed my life. And I've sent a lot of my team to him, but there's this video he plays. It's of jelly beans. And it shows how we're spending our lives and the time. And I think people spend 2,800 days watching TV of their life. And they only spend about 700 taking care of the people they love. Like, think about like the values that represents, because your time and how you spend it is the most valuable thing. It's the greatest equalizer. We only all have the same amount of time. And And to me, doing this for you is way bigger deal than giving you money, honestly. Like, like taking time out of your day is a bigger deal. And so that's how I've prioritized it. I also like am a very big no cell phone person. So I take everyone's cell phones away when they come to our house. And we play a lot of games and like try to
That's
make
cool.
sure the time is really present and valuable. And so, I mean, I think it's about like sort of boundarying that as much as you can.
So I spent the weekend at your house, and that's no joke. Like they eat every meal together, their family does. So breakfast, lunch, and dinner, they sit down at the table, no cell phones. They talk. Like this is, I know I'm talking about like this is like a foreign concept to a lot of people, but it's true. And I kind of love what you said about being underestimated and like the trade-off is that like because of your success, you now have this reputation, like no one's underestimating you anymore. But it kind of was like a superpower. Like, go ahead, underestimate me. I dare you, buddy. Like, really interesting. It's a little bit of a sacrifice.
Yeah,
Um,
that's true. Well, I do have my badass ring. It's my
you
favorite.
have to have that. You've got to have
My
that.
reunion ring. I bought it with our youngest daughter. She's like, Mommy, she was 5. She didn't know what she was learning how to read. She's like, I think it's a cuss word. And I said, Kate, you can cuss if you start a company and have 3 kids too. I'll let you do that. You call yourself a badass.
Okay. I think you're definitely a very disciplined investor. What are some of your non-negotiables when it comes to selecting deals, choosing the right equity partners, and like just how do you maintain that discipline in some of these more competitive markets?
We really do dig in and we look at so many deals. Since starting Merritt Hill, it's like one of my favorite stats. We've looked at 12,492 properties and we've only bought 571 properties. So like only 4.6% of what we look at have we bought. And so it takes that discipline. And honestly, I'm probably not as smart as everyone thinks I am because, and I tell this to my team, the more you look at, like you can't do investing part-time. I think actually that would probably be my biggest sort of piece of advice for anyone getting into storage is like, if it looks too good to be true, it might be. And like, there are a lot of investors now in storage. So like, if it's been picked over, I mean, look, of course there's that deal that like, no one else has found. That I think a lot of people overvalue off market and sort of are drawn to that instead of really doing the fundamental analysis. Like, we buy a lot through brokers. Like I won't go around a broker. I think cutting a broker out of a deal is a really dishonest thing. Like they're building their own business and making like their own family income. And Brandon did not tell me to say this, but like also like it's kind of stupid because they have more power than you do. It's a lot of freaking money in the world. And I think I got that early on in life because I never thought I was better than anyone else because of how I was raised. And I was in private equity right out of college, which is very rare in 99. And that was a time where there wasn't a lot of money and we were like the kings and queens of Wall Street. And I just didn't have that same ego. And like, working with brokers is a much smarter move than to work outside of brokers because the reality is most sellers are going to ultimately use a broker if they have something that's really valuable to sell. And so if you piss them off along the way, they are certainly not selling it to you because there's only so many storage facilities. And candidly, I think there's probably less brokers than there definitely are less brokers running around selling things, even though it feels like there's a lot now, than there are people who want to buy them. And so like, you're basically really shooting yourself in the foot if you do that. And I shouldn't have said that because now hopefully, you know what, people get it. But no, I think you really have to do the work and it's hard to do it part-time. That's the only thing I would say is like, don't let someone get you, like make sure if you really feel like it's a deal that's unique, that you really talk to people who know what they're doing. Because I do think we have seen plenty of deals that on the surface look like that. Oh, we should do that. And that's what I mean about the details. When you start digging in, it's like, crap, this guy knows exactly what he's doing. He's raised all the rents already. he's above the market rent. And it's not so simple as like it has a chicken coop on it. We bought a property, Cole, and I went to it. It had a chicken coop on the property. And right, like you could easily judge that book by its cover. It's one of our worst deals. Like it did not do well. Like, it's like this great story. It looks like this, sort of, I'm from the city, so like a little bit of like a farmer kind of guy, like, right? Like, oh, whatever. And honestly, it didn't do very well. Like he was really, really smart and did know what he was doing. And so, like, I think that's the devil's in the details of this. Like, and don't judge a book by its cover when you're buying from some of the people who've been in this business. Like, I think I've said this before, but if someone's been in storage for longer than you, they're smarter than you. Like, they are. Like, don't think they're some dumb guy. Like, they could be 100. I don't care. If they've been in storage for 40 years, they know what they're doing. And like, probably a lot better than you do. Because you probably just read about it in some Wall Street Journal article over the last few years. And like, you're not as smart as you think you are. Sorry. Like, right? I mean, I've only been in it for 20 years.
Kind of opposite of that chicken coop example. Do you have an example of where like sticking to that discipline saved you from a bad deal, or gossip, a bad partner?
Oh, I'm not gonna gossip about that.
Ah, man, bummer.
I will say that when I left Carrie, I went and got 8 different term sheets, and I chose the person that I thought and felt that I could trust it the most. And that is way more important than the terms. Like, in the long run, it's about the person you're making a deal with, not like the economic deal, because that will influence the impact and outcome way more than it's just like, who you marry is the biggest decision of your life, the most important one. Like, who you partner with is very close to that. And I was fortunate actually to partner with a guy named Billy Raun, who now has his own firm. He did leave Centerbridge. So like, people can leave, so the documents do that. But like, like I did, and they've been great. And now we have our own investors. And that's been a whole new world. And honestly, it's been amazing. And I'm very proud to say that University of Michigan is one of our big investors. So I was definitely all in on March Madness this year.
That's cool. Hey, you know what? When you I'm gonna take some questions that I see in the chat, but when you were talking about that chicken coop, Liz, and I don't know how much you talked to Claire at all, but I sold them a property in Bakersfield where
We probably bought that property from them in WB Carey.
no, not this one. This one was like 30,000 square feet of storage, and it had a hotel, and the guy was
No, not a hotel, a motel.
Okay, yeah, I'm sorry, it was a motel.
Let's be clear.
A motel with like 2 rooms in it.
9 to be exact.
Claire always gives me some flack about it because he was living there with his wife and child and renting motel and storage, and he had chickens and animals and like a little farm there, and it was a very, very interesting deal. So that made me
Has the
think
deal
about
done well, Claire?
No comment. We've been operating the motel much longer than expected, put it that way.
Yeah.
That's the issue. We ran into some issues with them wanting to bring water underneath the highway versus where we originally were told we could get it from. So in order to rebuild, that's just financially not acceptable. So we kept running the motel because of the income. And we recently closed it like 2 months ago, actually. So yeah, wow. It's been an interesting undertaking.
Right on. I love you too, Claire. I'll buy you some lunch. So hey, I'm gonna take a couple of these questions, Liz, from the audience. How are we doing on time, Liz? Because
I can answer some questions if you have time.
Okay, all right. So Jay Allen from Performance. I know you've done a bunch of deals with him.
Yes, I have. Hello.
Yeah.
Love you.
Yeah, he's asking, how are you projecting rent growth moving forward? Because we seem to have stalled. Are you seeing any light, at the end of the tunnel? And also, are you looking at any, broken lease up deals at the moment?
There are so many broken lease-up deals, and
Yeah.
I don't know why in storage. Maybe it's just human nature to post on social media all your successes and not your failures. There are a lot of failed stores in
Yes.
storage that people aren't talking about. Look, it's a great business. So on the flip side, it takes a lot more to blow up a storage deal than other deals. I mean, it really is a good business, but I think that things are starting to improve because development is starting to actually go down. But I will say, like,
Right.
what is crazy to me when we're buying deals, and actually one of our analysts, it looks like actually two of them, Maggie and Colton, are on the phone. They could attest to that. It's shocking when we do a development search that there are still people developing in this market with how horrible like this market has been. I mean, this is the worst market in storage I have seen in my entire career. And I have been dead wrong. I always say I can't time the market. Um, and I do believe that. And this market, kind of like what I was saying, like my daughter being so sick, it's like you can handle more than you think. This is like, I definitely can't time the market because I cannot believe it's still this bad for this long. And it is still pretty bad. And I don't think
Liz, not to cut you off. So that's funny you say that because Brett, when he was on a couple of weeks ago, he said the same thing that the past 3 years have just been the worst he's seen in all his 26 years in storage.
yeah, and I gotta tell you, some of the old guys who've been in storage for a long time are getting out. And I'm like, maybe like, like they were smarter than me when they got in. But like I think it's about the development, right? And I don't like to call integrity on people. Like that's a high bar for me. I do think there are some people who are developing things for the fee instead of the return. And I think
Yeah,
it is really hard to protect against economically irrational competitors. So if
yeah,
people are rationally building, that's a very different thing. And look, I've done bad deals. I'm not a developer. I'm sure there are developers who are, I mean, most developers, I have a lot of friends who are developers, are really, really smart and like, do deals they only believe in. And some, I mean, they can be optimistic, but like, that's not like a nefarious, like you're doing it for the wrong reasons. But I do think storage has gotten so much attention that people are just throwing stuff up any which way. And like, those don't always work. And those have really hurt our industry significantly. And I think, a lot of the good was pulled forward in COVID. So we got a lot of the absorption then and growth. And I think that became a double whammy because the industry did so well
yeah,
that additional supply was built into a time when demand was, like we basically had an enormous drop off in demand at the same time we had supply coming online and then interest rates growing. So it's been a perfect storm in the space. And I think if you're really doing your work as a developer and really, really being cautious and careful, there are places maybe that still need storage, but many, many places are overbuilt to the point where the rents might not recover. So to your question, Jay, I would say it's so dependent on the individual market and the dynamic within that. And one thing I will say that's really, I look, like I mentioned, at all the deals that I've screwed up and I take personal responsibility for any of those. We have a deal in Des Moines that, usually I can look back and say, yeah, I definitely screwed this up and I can see right away what I missed, right? This deal has a perfect location, like very good basis per foot. When we bought it, the saturation per foot was really low. Like, and I'm looking at it, I'm like, okay, I'm willing to own my mistakes, but where is it, right? Like what happened was we had 4 properties built on top of us. So this is an example of developers really knowing what they're doing, right? Like they found this market that was undersupplied, and then it tipped over probably at that third store, and it has not recovered yet. And I don't know if it ever will, because like there's not enough growth in the market to potentially need all the storage that was built. And I think what I've learned, I'm not a developer, but I've learned through that, we are an acquirer. You can have a lot of time into a deal, like Brandon, we've had deals where we tried to buy them for a year and a half and still said, I can't do it. Like we've gotten to the end, it looks like we have a deal, but they still want the deal at a price that I never was at. And I'm like, I still can't get there. Right? And like, even though we have all this time into the deal, like the easy thing would be like, sure, let's do it. We've wasted so much time. I want to do this deal. You've got to be able to like keep that discipline of like the time and effort. And so I think like when you're developing, you need to make sure that like once you're ready to put shovels in the ground, that like it still is a good market, right? Because that may have changed over the couple of years it took to develop it. And so I think it's really a devil's in the details. I mean, the durability of our income and the uniqueness of our business is that it really is a local radius business. And so that local radius still really does matter and what's going on in that, 3 to 5 mile. I think that's expanded obviously for a more rural area. But we do, Jay, almost always have rent growth because we can't buy stuff that's not below market rent at the cap rates we're buying at and end up making the deal work. So typically it's really relative to where market rents are, but we do not grow market rents from where they are right now. And I don't know when that will really be comfortable coming back because that's more of a macro secular bet than I'm willing to make right now.
Yeah. I had there's a question I have for you because this is something that I spoke about this with Brett and that we're seeing like in tertiary markets and rural markets where the developers are not as active, the rents in those markets are actually higher than some metro areas. So would you be looking to go like would Merritt Hill ever look to go into more tertiary markets and more?
We've been in tertiary markets before people were calling them tertiary.
Yeah, right. Yeah. Well, I guess I say rural. I guess more like even more tertiary than
How
what you're
rural,
in now.
like, are you talking?
Yeah.
Like, I mean,
Well,
you have to have density, like, like some density.
right. I got you. Okay.
It's a trade-off. Look, we have investments that are very, like probably 10,000 in 3 miles, which is very low, but they're high incomes. So like, it has to balance it out, and there has to be some constraint to development there that would make sense. Like the Northeast tends to have more zoning and California tends to have zoning that would protect you. I think it's pretty dangerous to buy something. Well, especially it would depend on the per foot, right? It's just like kind of like it all sort of depends and it all matters the entire facts of the deal. But if you're going into a rural area where land cost is not that high, you really want to make sure to protect it in your basis. I mean, Maine is actually a great example. I love Maine. I cannot believe how many storage facilities are in Maine. Our daughters went to camp there. They don't go anymore. You drive along this road and you're like, is Maine a storage center? And there's a lot of land, right? And so, and I guess not a lot of zoning. And so like, if you're one of those buildings and you bought it or you built it for 150 a foot, you are really not going to do well probably because the rents aren't going to support it.
All right. I'll actually two more. John McGrath, he's out of San Diego. He has a question. He noticed two recent acquisitions from Merritt Hill in San Diego, which are small, older generation properties. Is this a change in your targets for acquisition? Are you looking at smaller, older sites with different metrics?
Our head of asset management would say absolutely not, because they're more work to turn around. I think it's like one of those, it depends. If it's in San Diego in a really great area that it's a hard area to build again in, like those are actually some of my favorite deals, right? If you can find them and you have enough room in the deal to do the CapEx that needs to happen and to take the time to get it sort of up to where hopefully rents will be. Obviously, you can't assume they're going to necessarily get to the same rent as the market because your product might not be as nice. But we buy for sure older generation stuff. Like a lot of our stuff is that because, drive up product is quite like, I mean, everyone likes drive up, the customer does, right? And I think that's one of the unique things about storage. What I would say that is a lesson learned, and we have this conversation internally, a lesson learned is that if a store is, it's not about necessarily the size of the store, but the revenue. So like if you're buying a store that's like 30,000 square feet and the market rent is like $8, like you're not going to get the margin out of that store. And what we're starting to see is those are our deals. It's funny, those are the deals that either are our best or worst deals. There's a lot of risk when you're buying those smaller stores, because if you can't get the revenue up, you can't get margin, and it's not going to perform the way you need it to perform, or at least for us, we found that. So you really have to be careful with those smaller, older stores. But we have bought a lot of them. I will say, they're probably, we look a lot at how we're doing projections. They definitely, in fact, I looked at it like Friday night at midnight. I'm like looking at, I'm not kidding. Like I look at things like this. I'm a paper person. This is kind of the stuff I'm looking at, like all the time. Like, like different ways, like everything. But basically, like, when you look at the deals that have done, like have gone on over 20% below our projections, those are the ones that land there more than any other type of deal, like the really small ones. And it's because, like what I was saying, like if the rent doesn't work out or the revenue doesn't work out, you don't have much protection on your NOI to get there. Because we don't manage our facilities, right? So like it's different for someone who does, and you can really cut expenses. But if you're not managing your facilities, then it's tricky. And one thing I will just caution everyone with is remote management is really hard. And I've said this for a long time, like when Yellow Pages was when we lost Yellow Pages, I was like, I have a feeling this Google thing is going to end up costing more money. And it does, right? Like people are really valuable and important. I just genuinely believe that. Robots are not going to replace all people. And at a storage facility, your manager is your most valuable asset. And a lot of us have made a lot of money on the backs of really hardworking property managers, on-site managers. And they do so much, and it's such a hard job. And I would suck at it. Carl Haas, the former CEO of Extra Space, is like, you're a lot like Ken Williams, the founder of Extra Space. He's like, you would give away the store. And I was like, damn right I would. Like someone comes in, they have like a problem, they're a single mom, they're struggling. Like, oh my God, rent for free for 5 years. Like that would be how I would do it. So, like I acknowledge I would suck at that job. But like remote management, like you have no one there protecting your asset. Yeah. And the other dirty secret of remote is very similar to Yellow Pages. You are going to replace that person's salary with software.
Yeah.
And pretty soon you're going to be in bed with a company who owns that software, who's trying to make a return for their investor, and they're going to increase that by 20%. And by the way, that's not, sadly, what hardworking people are getting, like in terms of their increases at properties, right? So like tread carefully in that, in remote management is all I would say. I know there's some groups that, and I'm not trying to like shit on the groups that do it at all. I'm very cognizant of the fact that this is an investment club, and I'm trying to speak to you guys to hopefully impart something, to protect against that potentially, is like, so that's why I mention it. Not that I know, again, there are people who've done it successfully, so I don't want to like say that's the Bible. I think it's hard.
All right. Go ahead, Ingela. Last question, Liz.
Well, Liz, thank you. This has been an amazing session, and I know I'm personally
Sorry, was founded in 2024.
Okay, Cameron, you're on the
Period. Storage Star
Cameron?
Management.
Okay,
was founded in 20.
Okay, where is he at on here?
Sorry. You might be able to get.
Okay, here he is. There he is. Okay.
Oh, you can mute?
Yeah, I can mute.
You got the power. Mute you.
Now you know.
Yeah.
What a time to be alive.
I was just saying that I'm inspired by your story and your discipline. And I do want to say, before I ask this question, Happy Mother's Day in advance.
Thank you. You too. I'm inspired by you.
Oh,
you guys are an awesome team, and I can't believe you have 4 children. I'm so impressed. And you're working like with 4 kids. It's insane.
it's a
So
daily work in
happy
progress.
Mother's Day to you too.
Thank you. I appreciate that. So I wanted to ask, do you have any specific advice for women who want to operate at a high level in this industry?
Be yourself. Like, don't put on an act. You don't need to be a guy. Like, we have superpower. I think being a mom is actually a really great thing as a boss, because hopefully like more people like treat their people like humans and with empathy and love. Like, that's really like the center of my life. I'm not perfect, but I think, people want to be treated as humans and they deserve that. And so like, there was a question in here about like, what is an advantage as a woman? I think sometimes, and I'm kind of done with men being shit on candidly. I'm so over that. And I think women need to stop it. It's just not right or fair. But sometimes I think, stereotyping, I'm acknowledging that men can have a bit of an ego with each other, and they can like, have a hard time backing off point. I think being a woman, like I can kind of like, sort of softly do that. And it's not as much, I have a potty mouth, but it's not as much as a thing in the fight, like, as a woman, right? Like, and I think that helps with negotiating, because it's not as like, I think some men may be softer with me than they would be against men. And then as it relates to being a woman, like, I think this is easier today than it's ever been, right? And also uniquely, I guess I would say that I think like there's a little more awareness and desire to have women in the workforce, because honestly, the business case for it is the reason. It's really important to have diverse opinions, like, and women do bring a diversity of opinion and thought to conversations. Just don't put on an act, like, and be true to yourself and work your ass off. Just, I mean, don't take anything for granted, or, or anyone for granted. And do what you say you're going to do. Like, that's like this sort of do what you say you're going to do, and the golden rule, or sort of, and that's why I think pastor's kid, some of the things I learned from my parents, like the golden rule, like do unto others as you want to do unto yourself. Like, that's like a life rule that's so like important for business. And it's like, it's so obvious, but the truth is most people don't do it. It's hard to do. It's easy to say, right? Even for myself, right? And so I think leading that way and doing your business that way, you can be, I think some women have like, we do make less, like there is a gender gap, right? And I think sometimes women are trying to overcompensate that, but like over negotiating. And it's like, believe it or not, men aren't doing it that way. They're not like, asking for double or whatever, like it's not like, and I think that's a disservice to women if they really, try to put on that act. Cause like, it may not get you what you think it's going to get you, like, and try to act with that. Like, the other thing that I think got me here was I never thought I was less than. And so, like, I think if you're acting and looking for how am I getting screwed here, you're going to be an angry person, right? And so, like, people don't want to be around or do business with angry people. And, like, even if you don't care about your success, that's not a very happy life to live, right? So, like, try really hard to not look at everything as like a slight, because it's going to get you off your game. Like, focus on, like, let them look at you and underestimate you. It's the best thing you've got. Like, like, I mean, you're not just a woman, you're a Black woman. Let them underestimate you. Like, right. And like, like, and that's not something, like, use it as a superpower. Don't use it as like, like, don't let them take your power away by making you angry. Right. Like, kind of like put it for positive lens.
Thank you. Thank you for that advice. And hopefully some other women here can take that as well. Appreciate it.
Absolutely.
Yeah. Well, Liz, we appreciate you for joining us. Great having you.
It's really fun spending time with you.
Yeah, no, it's great. We appreciate it. Hey guys, anybody out there, if you guys have some deals that you want Liz to buy, just send them to me and I'll show it to her. B Robinson at CalvaryRealty.com.
We might have some stuff for you to sell.
Right. Hey. If you see some guy named Jay Allen that says send a deal to him, don't send it to him. Send it to me, B Robinson. But no, Liz, I just no, we appreciate you. We thank you. You've been a
I really
gem
appreciate you guys
in
too.
the industry, and a lot of us, especially us brokers, we've made a very good living off of you. So we appreciate you.
With us.
Yeah. With you. Sorry, with you. We're actually making we're closing something next Tuesday, right? Next Tuesday.
Yep.
Yeah.
It's closing.
Yeah.
I'm excited for that one. I actually was looking at this. We've bought 4 properties from you. So like we need to get more done. Here, not in Cary. Not in Cary.
Okay. All right. Yeah. We need more.
We need more.
I thought it was more than that.
I could be wrong.
Okay.
Actually, you know what? No, it is more. These are only the ones we currently own.
Oh, okay. All right.
Sorry.
Okay. Cool.
Sorry.
No problem. But anyway, no, we do need to do more. So appreciate it. And we're going to be respectful of your time, and we're going to close it off here, guys. I know there's certain questions that we didn't get to. Maybe at some point in the future, we can have Liz come back on, and then we can have an open Q&A session.
I think we have to have Allison on next.
Oh, Allison is going to be on she's going to be on with her promoting the third party management in, is that June, Allison?
I think June. Yeah.
Good.
Yeah, you're going to be on with Cliff, right?
Yeah.
Yeah. Yep. She's going to be on in June. So also, guys, if you're looking for third party management, Allison DeJager, Space Shop Self Storage, they run a great operation, and she actually will be with us on June 24th talking about the benefits of third-party management. So with that being said, thank you guys for joining us. We're going to end it here. We're going to take a little break, and then I'll stay on afterwards in case anybody has any questions about the club, any questions for me, any deals that you guys want me to look at. But yeah, that being said, thank you guys for joining us, and thank you, Liz.
Yeah. Bye, guys.
Thanks,
All right,
guys.
bye.